Okay, so we are really lucky to be joined today by Alissa Welker, who is a farm experience manager at Steward, which is the world's first crowd farming platform, a term that I really like. And it provides funding to regenerative farms through direct online investment. We will hear a lot more about what Steward does from Alissa, but just super grateful to have connected with her through actually a previous Climate Farm School participant who was up here at Midnight in September and told me about the awesome work that Steward is doing to support regenerative farmers specifically. So there's a lot of support that is needed, as we all probably know, to finance and enable the transition towards more regenerative practices. So Steward is a really interesting piece of that puzzle. And I'll turn it over to Alissa to share, and then we'll have plenty of time for Q&A with our group towards the end. Thanks, Alissa.
Awesome. Thanks, Lainey. Morning, everybody. Excited to be here today to talk a little bit more about Steward and also just in general, the kind of financing world for regenerative farmers and what that looks like. Have a short presentation that I'll share my screen in a minute, and then we'll leave plenty of time for questions. So we'll set this up momentarily. Okay, awesome. So first, also to share just like a little bit of background of where I'm coming from. So I studied environmental science with a focus on food and ag, and then worked for several years at a agriculture technology company that primarily worked with more commodity scale grain growers and looking at how to use technology and data to improve efficiencies on their farm. And then I did some consulting work with a variety of environmental ag tech companies that were looking at anything from drip irrigation to new cover crop implementation and kind of the range. And then I joined Steward, which is much more on kind of the smaller human scale, regenerative and sustainable agriculture. We work with ranchers, fisheries, food hubs, kind of the range of the regional and local food system infrastructure. So one of kind of, I always like to start these types of presentations with a quote from Wendell Berry, which is kind of really gets at the core of how Steward, kind of the ethos around Steward and our belief in kind of the human scale agriculture and the need to kind of bring people back to the agriculture world. So as many people as possible should share in the ownership of the land and thus be bound to it by economic interest, by the investment of love and work, by family loyalty, by memory and tradition. So that's from The Unsettling of America by Wendell Berry. If you guys haven't heard of him or haven't read Wendell Berry, cannot recommend his books enough. And so Steward started really to play a role in the system that is not, there's a lot of ag tech companies and a lot of infrastructure and more around commodity corn, soybean, wheat. You get down into the Delta region and then Southeast, cotton. And these farms are the ones that are supported by the infrastructure that really exists today. And the vast majority of family farms that you hear of are these 1,000+ acre grain farms, the corn, soybeans. I'm from Missouri, from the Midwest, spent my life kind of driving through kind of these vast fields of corn and soybeans. And to me, growing up, that's kind of what agriculture looked like. And in this system, in the larger commodity system that exists as the primary ag system in the US today, these commodity farmers have a pretty clear route to capital access. And so there's kind of pretty, there's systems in place with America Ag Credit, USDA, the ag bankers for the system know basically the input-output commodity model. So you're growing corn and soybeans in Missouri, you need X amount of inputs, you need to apply X amount of herbicides, insecticides, synthetic fertilizer, you will get this output. You buy X amount of crop insurance that you know will subsidize any losses. And that's just the system, a very kind of commodity, all about scale. And that's what these banks know how to underwrite, know how to lend to. But once you kind of move away from that model that the banks and the system are comfortable with, nobody really knows what to do with these small farms. If you look at USDA data and from the farm census, small farms are defined as less than $350,000 in sales. And so, but 82% of farms have less than 100,000% in annual sales. And so it's really interesting when you could slice and dice the numbers from the farm census, you know, however you want, but it's like really interesting to look and see the just kind of the centralization of commodity agriculture as the big farms are getting bigger and bigger and the small farms are getting smaller and smaller. So these human scale is a term that Steward likes to use, you know, getting away from the picture that we showed you of the giant combine or the planter. Think instead about, I don't know if you guys have spent any time on these smaller diversified farms, but think about a BCS walk behind tractor, which is really like a walking planter that has different size gears for different size seeds. So there's all sorts of kind of this technology and implementation for this smaller scale type of agriculture, which we kind of call human scale. So human scale farmers really don't have a good way to get access to capital. So the larger system, as I talked a little bit about earlier, is dependent on government subsidies and loans. Just this morning, I was talking to my manager about, we have been talking to a farmer down in Louisiana and looking at, is there any way we can help underwrite a loan for him? He's in the process of transitioning to more regenerative practices, moving away from synthetic pesticides and herbicides. His bank, you know, as I talked about before, like the bank knows what to do when it's just, these are the inputs, these are the outputs, you get crop insurance, that's it. As soon as he wanted to move towards, hey, I want to start planting cover crops and I want to start using these biological inputs rather than the glyphosate and the dicamba and whatever other traditional herbicides and pesticides are used, the bank basically didn't renew his operating line of credit. So it's not only that they like it doesn't exist for these types of, or it's hard to get access for these types of like human scale farmers, even the commodity growers that realize like, hey, I want to do something different. Many times their livelihoods and like getting their line of credit they've gotten for years is at risk as soon as their banker finds out that they want to do something different. And that's because all of the crop insurance programs and the subsidies and the programs that exist are around the conventional commodity scale agriculture process, and just really catered to that high volume commodity producer. And there really is pretty limited financing options for these smaller scale human scale farmers. So one of the things I want to talk about is what options do exist for these diversified vegetable growers, for these ranchers that want to grass feed and finish. So in some ways, I like to call them the misfits of agriculture. They don't fit into the normal system that at least the USDA and the government is used to thinking about large scale kind of commodity agriculture. And so there's some different options. So the first one that I'll talk about are government loans. There still are USDA loans from the FSA for these types of farms. One of the challenges with a lot of these programs from the FSA is, like any government program, it just takes a really long time to navigate, which we'll talk about in a minute. There's also these specialty banks and alternative lenders, which I kind of put Steward in that category. So as we've realized that the government loans and the larger FSA programs don't meet the needs of all of these producers, there's kind of more and more different types of funds that are popping up to help support this different type of agriculture because of the recognition that the traditional finance system just isn't serving these types of growers. So one example for those of you that are in the Pacific Northwest, Craft 3 is a CDFI that does a lot of lending to kind of local human scale agriculture projects. There's also an organization called Mad Ag that's based out of Boulder, Colorado. They have something called the Perennial Fund, and they're actually working with some of those commodity producers, you know, like the story I just said, that, hey, as soon as these commodity producers want to transition to organic or want to do something different, it takes a lot of capital upfront to enable that. And that's kind of what the Perennial Fund is aiming to do. And then there's Steward, and I'll explain a little bit more about what our loans typically look like, who we're lending to, et cetera. So then the next category that kind of goes in this world of alternative farm financing is the social crowdfunding atmosphere. And so that's kind of Kiva and GoFundMe. So we typically find farms that are looking like, hey, I want to raise $10,000 for a small farming implement or something small. These options can be really good. You know, Kiva, I think their max loan amount might be 10 or 20,000. I know it's changed over the past couple of years. GoFundMe, there isn't really a max, but it's how much people are willing to donate. And what's different about these kind of crowdfunding scenarios is it's typically smaller amounts because it's not about the lender or the participant on the other side getting a return. It's seen as more of a donation than actually a capital, you know, a way to earn money on the other end of the equation. So there's a lot of really interesting stuff happening, a very technical term, but activity happening in kind of the alternative finance world of how do we get people that want to give money and put their money into this. How do we give them an avenue to do that? And then the last kind of piece of this is equity crowdfunding. So this is, I don't know if you guys have heard of any of these companies, Farm Funder, Farm Together, Acre Trader, Harvest Returns. These are focused typically on larger scale, kind of like land purchases, equity buy-in. This is crowdfunding. So crowdfunding actually is a pretty specific financial term. So under SEC regulations, crowdfunding is a particular kind of has particular regulations around the crowdfunding model, which is very different than like the social crowdfunding of something like that's a donation with GoFundMe or even Kiva, which is also very different than Steward's model, which technically is not investing. It's technically not crowdfunding. It's set up as a participated loan model, which I'll talk about in a bit. So as I mentioned, Steward kind of lies in this middle category here. So one of the things that kind of want to share a little bit more about, in addition to that high level, so there's the USDA grants that can take a lot of time to get, only have so many resources, so much money to give. We often work with farms that either have an existing FSA loan or have been trying for a really long time to get an FSA loan and just aren't able to check all the boxes because they don't work on a time frame that these farmers need. And that's kind of where Steward comes in. What we're really focused on is providing loans to farmers, ranchers, fisheries, like I said, kind of the range of local food and agriculture producers, to get them capital to put into specific projects that can help them increase revenue on their operation. So we're really equipping these farms and food producers with the resources that they need to grow. So a little bit of background on Steward and who Steward is. So we were founded in 2017 by Dan Miller. His background was at Fundrise, which is a equity kind of crowdfunding for real estate. And he was always in kind of his background in finance and really wanting an alternative way to get more individuals being able to invest into different types of economic systems. And then he, at the same time, his background in finance, and then he kind of got to talking to one of his chef friends and realizing that many of these smaller human scale producers don't really have a way to access funding. And this chef friend was looking for a very specific, actually, type of pepper called a fish pepper, that's known in the kind of eastern region in Maryland. And one of the farms that was growing this fish pepper for this chef, their limiting factor was they just couldn't access financing to grow the volume that this chef needed. And so it was like interesting, he had a market for it, yet couldn't meet the demand because the financing just wasn't there. So Steward, like I said, we're a private commercial lender. We're a non-bank financial institution. So I say that because once you get into the financial world, there's all sorts of regulations around lending and around investments and what's regulated by the SEC versus what's not. And so we provide commercial business to business loans to these agricultural entities. We operate in almost all 50 states. There's a couple of states that have their own particular commercial lending laws, where we currently don't operate, but we work across the United States and actually have a fully remote team as well. And we provide flexible business loans, so commercial loans, as well as services if we help farms with grant writing. A lot of these farms, particularly with navigating the USDA grant funding system, don't know where to begin. Navigating the rules of any grant is really difficult. And so we provide kind of help on that, as well as our underwriting process with these farms brings in, we have agricultural experts on staff that used to be farmers themselves. And so much of our underwriting and diligence process for the loans that we provide really include kind of like a hands-on look at, how is your farm business set up? Can it, will it work? What's cash flowing? What are the different avenues for income? And really looking at the business as a whole, versus many banks are typically just looking at, okay, what's the security position, and kind of that's it. So we take a much more holistic look when we're doing underwriting. And Steward is a certified B Corp. So as a mission-driven lender, we're not like a typical bank. We actually, a big part of our underwriting process is about that agricultural review and looking at the practices that these farmers are deploying on their farm. And this is where our agricultural specialists on staff come in and are really kind of talking to and working with these farms to understand, okay, if they're a ranch, how often are they rotating their cattle? Or, do they have are they seeding every year? Like all of these very kind of technical agricultural questions, and that you have to have that knowledge and kind of on-farm experience to know to ask and to kind of bring new ideas and make sure the business is set up as best as possible for success. So we really focus on these smaller scale producers that can have both a positive environmental impact, but also really looking at how do we build up local and regional food systems, rather than the model that you all know is the predominant model today, where we have such a globalized food system, and oftentimes, something that is getting produced in one place has to be shipped somewhere completely else to be processed, and then is like shipped all the way back. I actually learned last week, we're talking with a poultry or beef producer in Hawaii. And because of the processing shortage on the island, I learned they actually fly the cows to the mainland to be processed and then fly the meat back. And so it's pretty amazing when you hear about all of the inefficiencies that exist in the commodity system today. And how do we get that to a more regional and local level? And that's really one of Steward's focuses. So like I said, we work with a range of producers, everything from, I think we've talked to like a silkworm business, kind of, like I said, anything that you can imagine that's different than a commodity scale agriculture steward that has a positive environmental impact and is really focused on the regenerative and sustainable practices. We kind of talk through and figure out if there's an opportunity for lending for those types of businesses. Our loans are secured loans, which basically means that we take collateral from those loans. And so typically our loans need to have a very specific commercial purpose that can help increase the revenue and profitability of the business. So that often looks like equipment, infrastructure, real property, inventory, things like inputs and working capital is much harder for us to underwrite from a financial perspective, because as soon as you put the seed in the ground, yes, there's the crop that you hope comes out of it, but it's a much harder thing. It's not as secure of collateral. And so that's definitely something we're always looking at in our underwriting process is we always talked about like in the parade of horribles, if something were to, many things were to happen to the business and they were to default on the loan, is there something tangible that can basically be sold in order to repay lenders? So typically what we're looking at for these borrowers, so they have to be in the US, they have to be a registered business in good standing. And so we actually do not lend to sole proprietorships. It has to be an LLC or a corporation or a different entity structure. And that's because we are doing commercial loans rather than kind of personal individual lending. We're typically looking for at least 3 years in operation or experience. We do lend to some startups if the team on staff has the agricultural knowledge, experience, and wherewithal to kind of manage that plan. We do require a pretty strict set of regenerative practices or farmers that are transitioning. So historically, we haven't worked with many farms that are using any synthetic inputs on their farm. But as I mentioned, the example of the grower in Louisiana that I was talking about earlier, he is a cotton grower. He's transitioned to all biological inputs with the exception of a defoliant. And a defoliant is basically what that means, or what it's used for is at the end of the cotton crop before it's harvested to open up I don't know the correct terminology of it, but like the bulbs or the leaves around the cotton, there's this synthetic defoliant or input that's typically sprayed onto the crop to encourage that, to get it to open, which is then needed for harvesting and processing, et cetera. And so it's really interesting, some of these farms that are really trying to transition away from any synthetic inputs, there's all of these barriers of not just, losing access to financing, but also if you look at the commodity system as a whole, so much energy and technology and development has been put into these synthetic products by the large agriculture companies. And so even getting access to some of these biological inputs is really difficult for farmers. So we are looking at more ways in how we can support businesses that are transitioning away from kind of conventional models to a more kind of focus on regenerative, maybe kind of moving away from the commodity system and developing more markets. And then, like I said before, we're really looking for securable business assets. So something like inputs or seed, really hard to lend against, versus a tractor, much easier. Something really bad happens, the tractor can be kind of recovered to help pay for that loan. And then we're also really looking at, particularly with these smaller scale businesses, we've found that having a really strong brand and customer presence and community around them is really critical for support. The commodity growers that are doing corn, soybeans, wheat, they just drop their crop off to the local elevator. There's tons and tons of markets, versus your diversified vegetable farmer down the road or that you see at the farmer's market. There's a pretty limited number of places that they can sell, just because they produce such a small volume that even a grocery store like Whole Foods that claims to really like to support and buy local, they need to see pretty massive volumes of crops to be able to actually kind of buy from and sell the produce from these local smaller scale growers. So how Steward works, we have from the borrower side, we have an online loan application. We have a diligence process that includes an agricultural review, financial review, kind of character assessment, and work with these borrowers to bring them through the diligence process. My role at Steward is to kind of help bring different people in and out of that process and kind of talk the borrower through the financial jargon that comes from our finance team, or explain what we need to see in order to get them to approval. And then how Steward is different, I mentioned earlier this concept of a participated loan. So this is kind of a complex little chart here, but if you think about this, so there's the borrower, the small scale farmer that is looking for a business loan. They come to Steward, and Steward looks at all of the different scenarios or kind of pieces of the puzzle that I looked at for underwriting, and we approve the loan. And then how it's set up for our participated loans is, as soon as the loan is approved, we then set up, if you go to gosteward.com, you will be able to see our past projects. It looks and feels kind of like crowdfunding. So we'll set up a project page that explains more about the farm, more about the specific loan, their regenerative and sustainable practices. And then lenders, which are people with as little as $100, can basically buy pieces of this loan, and then they are the ones receiving the interest back when the borrower is making repayments. So Steward, I work very much on the agriculture and the farming side, but we have the other, 50% of our customer base, or the other half, are lenders, are individuals that are really looking to put their money into regenerative and sustainable agriculture. And so that's kind of the other kind of component of what makes Steward work, and where this money is coming from are from these lenders. So this is called a participated loan. And what has enabled it is Steward has actually built our in-house platform and kind of a technology platform on the back end to enable, let's say there's a loan that's $100,000. There may be 30 lenders in that loan, ranging anywhere from putting in $100 to $10,000 of that $100,000. And then when that repayment is made, our system then calculates the exact interest that should be going to each of the lenders. And then it automatically shows up in your Steward wallet on your Steward account. So on kind of the back end of everything, there's this tech component that enables the structure that Steward is set up with. So as I mentioned, if you go to gosteward.com, you can see all past campaigns, but really a range from a bison farm to an urban infrastructure, purchasing land, setting up a grass-fed beef brand, to mushroom production. It's been really cool for me, especially coming from the commodity ag space, to be able to work with such a range of producers doing such different things, and learning mushroom production one day and sustainable fisheries the next has been a lot of fun. So some common loan terms for our farms. Typically it's one year on the short end. We have one other type of product called Steward Regenerative Capital, which if you go to our website, you'll see, and that's more for loans, property purchases, something that needs to happen quickly, short-term bridge loans. But these are the common terms for participated loans, which are typically ranging from 4 to 7 years. Typically we'll leave in a 1 to 12 month deferment period. If a farmer is buying a walk-behind tractor in the winter, they're not going to see the efficiency and the benefits until midsummer. Once their crop is growing, we will put a 4 to 6 month deferment on that, so then repayments don't have to start right away. Interest rates range from typically 5 to 10%. I would say one of the biggest pushbacks we get is, why are interest rates so high? And the reason that is many, if you go to a bank or any traditional lender, their interest rates are set by the government. It's kind of the big system, like kind of the government money that is subsidized and allows it to be lower cost of capital. Whereas what we've found is for individuals, for you and me, to feel like it is worth kind of the risk and doing something different with our money, there needs to be that higher return. And so this is where there's a little bit of friction between kind of our borrower, farmer, customer base and our lenders. Is, okay, the lenders need to see some sort of return on the money that they're putting in. If they, what's different than, say, a Kiva or a GoFundMe is, we have lenders putting in hundreds of thousands of dollars, not $100, $200. And as soon as you're to get the scale of money that's needed to fund these projects, a 2 or 3% return is not going to be enough to attract the lenders. So it's a constant balance in making sure the interest rates are too high, but they're high enough. And then loans are sometimes fully amortized, which basically means fully paid off principal and interest over the term, or sometimes they're interest only. Interest only is pretty much only when it's like a land purchase or really secure collateral. And then how Steward makes our money is a origination fee on the total amount. So Steward doesn't take any of the interest return. All of that goes back to the lender. So if you put in $100 into a $30,000 project that's at 8%, you will get kind of the pro rata 8% back on your $100. Steward doesn't take any of that. We just take a one-time origination fee. And then this is what I talked about of the SRC, Steward Regenerative Capital, which is again for more shorter term loans. This is rather than lending to one specific campaign, lenders can go in and put money into the SRC at any time. And then it's a kind of more diverse portfolio of farm projects that's managed. So this is just a quick map of where a lot of our projects are. So you can see all across the country, we definitely have pretty high concentration of projects in Oregon, and then all across the kind of eastern East Coast as well. And that's Steward. So I know I just shared a ton of information and definitely can answer any questions, share any more, but happy to be here and share more and go from there.
Awesome. Thank you so much, Alissa. That was super informative and awesome to walk through, from the commodity side to why regenerative farmers need different financing and how Steward does that. There are a few questions in the chat that I'll kind of refer us back to, and then other folks who have questions, either feel free to put them in the chat, or we can just, unmute and raise your hand, speak them out loud. But the first question was one from Ash and one from me on a similar vein about these lenders that you have. I know you work more with the farmers, but I'm curious who these lenders kind of are, and if they are lending in really small amounts or typically more than that, and if they're just like these values driven, mission aligned people who are like, I'd rather do this with my money than put it into something that might get me more money back, but it's not necessarily supporting these regenerative farmers who really need it. So
yeah, that's a great question. So I would say there's a subset of lenders that are like me. Like I have, some of my money into different Steward projects. I'm not a multimillionaire. I'm not putting hundreds of thousands of dollars into these projects, more like a couple hundred. And I would say, so there's kind of a subset of our lenders that are really just looking to put their money into something other than just the stock market, really believe in regenerative and sustainable agriculture, think about it as like a different way, of supporting local farm infrastructure, not just buying a CSA, but kind of being invested in that farm in a different way. So there's a fair number of our lenders that are kind of in that ballpark, putting in a couple $100, maybe $1,000, et cetera. But then basically the largest amount of money that comes in, there are some kind of high net worth individuals or family trusts, folks that do have access to more capital, but but more private money than kind of any bank money that are putting in some of the larger amounts. So we just rounded out a $1.41 million campaign for a farm in Vermont. And I believe the largest lender, the smallest lender was $100 in that project, and the largest was $400,000 from another organization that kind of came in and partnered with that. And so huge range. I believe that project had over 100 lenders. So it really is about building up kind of the army of lenders and the folks that really want to participate and kind of have volume in that. But then also, as you can imagine, an over $1 million loan, really hard to reach that goal with all $100 participations. You need some of those higher dollar amounts. And I'll round out this answer with one of Dan Miller, our CEO's kind of goals with Steward was to enable non-accredited investors, folks that don't have millions of dollars, but still want to put their money into something they believe in, enable that to happen through this participated loan model.
Cool. I know I'm like motivated to like get in there too. I'm like, this seems like it's for me.
Yeah, very cool.
So Eduardo, I'll pass it over to you to ask your question and then maybe to Ash.
Thank you, Lainey. Congratulations, Alissa. I think it was a great presentation, and I love what you are doing. I actually work at a fintech startup, so I love the topic, and I would love to, instead of finance oil companies, to finance regenerative farmers. I have a couple of questions. The first one. What activities happen for the for you to give a credit? Like, is it all online, and how long does it take?
Yeah, so it really depends on the ask and the farmer. So let's talking about like a $50,000 loan for some on-farm infrastructure. That's typically done all remotely. There is typically an application review, which I will do. I'll then pass it off to our agriculture team, who will talk to the farmer, have a Zoom meeting, talk through a lot of the agriculture business questions. I will then request tax returns, P&Ls, like all the financial statements. Our financial team then reviews all those statements. There's typically / always some back and forth with additional questions, getting comfortable with it, that will go back and forth with the farmer. And then it gets approved from there. So that size of loan is typically done fully remotely. Once we get into the larger loans or land purchases, we'll typically do an in-person site visit. And that's typically either done by somebody on the Steward team, or we also we have a stable of contractors that we use that have specific knowledge in sustainable fisheries or in meat processing or in ranching that we'll bring in if we don't have that expertise in-house.
Okay. And do you serve only the banked farmers, or do you also serve the unbanked farmers?
Like farmers that already have loans from other bankers, or
like, for example, well, I don't know, but the case here, I'm from Mexico.
Okay.
Most of the farmers don't have a bank account, or have no idea on how to manage their finances, or they have no records of their earnings, and like, is that data completely necessary for you?
Yeah, so I think there has to be some level of business sophistication and records in order for us to underwrite it. Also, because we are a tech company, while we don't require, I'm typically really walking through and doing a lot of the setup for our borrowers, so they don't have to do too much on the platform. But the way our service works is we're able to pull the payments automatically through a linked bank account from the farmers, and then distribute it then through a linked bank account to lenders. So they need to have a bank account set up. They need to go through, there's federal regulations around know your customer laws, like anti-money laundering laws that have to be done on the platform. So there is like some level of technological and banking setup that's required in order to get a loan.
Thank you.
Interesting. Let's see. I'm gonna go down to Nathan's question in the chat, and there was, I think, a follow-up to that. But Nathan asked, do you go looking for farmers, or do they all come to you? If you look for them, how? And then Chinwoo kind of followed up with, do you also look for lenders proactively, or are people just finding you?
That's a good question. So on the farmer side, well, so right now we actually have there's more lender interest than farmer projects. So if you go to our website right now, you'll see there are no live participated loan projects that you can actually go lend to. And that's because they've been, as soon as they get up, they've typically been selling out in a matter of minutes. Because there's just like so much lender demand. There's so many folks that want to put their money into these types of projects, which is a good problem to have. That's different than where we were like a year ago, where projects would sit up for weeks and it would be harder to kind of fill up those projects. So on the borrower side, farmers are tricky customers. It's hard to earn their trust. It's hard to figure out how to market to them. And then we're also, you don't want to sell a loan. They should only be taking out debt if their business really needs it. And so one of the things I would say that we're still very much cracking the code on is like, yes, we do social media advertising, we do online advertising, we kind of do partnerships and some events, but really making sure that farmers know we exist. And this is hard for any startup, but just kind of getting the word out there. And so that when it comes time, when a farmer does need that service, or need that, debt to take out a loan, they're aware of us. Very different than other kind of ag tech companies I worked at before, where you could sell them at any time of the year and you could actually sell them, and it, wasn't something like a loan. So there's definitely a balance there, given that it is debt. We don't want anybody to take on debt if they don't need it. And then on the lender side, there's similar kind of like online advertising, social media, word of mouth is huge. And then there's definitely somebody, kind of my counterpart on the lending side, that is constantly talking to lenders, reaching out, making sure people are aware of who and what Steward is.
Awesome. Good to know. Ash, I'll pass it over to you to ask your question. Ash, I think you're on mute still. There you go.
Of course. Thank you, Lainey. Alissa, nice to see you again. And thank you for the presentation. It was super clear. About lenders, does lender interest look like lenders literally just expressing, hey, I'm interested, or does it come with a certain, especially for like the smaller institutional values-based lenders that you just mentioned, does it come with more of a commitment, and is it, do those funds, I guess I'm asking you a little bit about your business model, do those funds sit in a capital fund somewhere, or is it, I'm interested in X type of projects? I guess, what are those, when you do outreach to lenders who are not in that $100 amount, but maybe more, not quite the accredited investor level, what does that look like?
Yeah, so it totally depends. I mean, I think right now, it's like if you were to go to Steward, like I said, there is no participated loan campaign, but there's the Steward Regenerative Capital. And so you could put in some amount in there. Typically, from a lender interest, like, okay, before actually putting money into the platform, we certainly have, like I said, somebody that's kind of my counterpart on the lender side, talking to them, explaining the setup. It is required in order to lend, there's kind of an account setup process. So you create an account on gosteward.com. As I mentioned, because we're a tech platform, and how the money movement is enabled is by linking a bank account, setting up a payment profile. I'd say the biggest question that our head of lender relations gets is, well, why do you need this information from me? Why do I have to enter my bank account? Why do I have to enter my social security number to verify my payment profile? And it's all because of federal lending regulations, know your customer. And so there's that kind of setup. So we definitely have folks that set up a profile, link their bank account, and then wait for a project that comes up that they're interested in. And then, we'll send emails once a project is going to come live. We send out kind of community newsletter updates that feature various farms that have loans from Steward. So we're really trying to create that community and more kind of knowledge sharing and storytelling also from the farms that we're working with.
Eduardo, did you have another question?
I do. I have many.
Oh, yeah, go ahead.
Do you have any idea of how your lending portfolio looks like? Like how many farmers are default, or how many farmers are still like in the process? And also, when do the farmers pay? Do they pay on a monthly basis, or by year, or by the end of the term? Do they pay the full interest?
Yeah, so I'll answer the second question first. Typically the loans, or pretty much almost all of our loans, are set up to have monthly either interest or interest plus principal payments. And that's set up, if you look at like kind of the back end of Steward, there's a payment schedule that's set up, and then to pull on the same day of every month. And that's automatically pulled from their linked bank account. So they don't have to remember to make the payment. They just have to remember to make sure that the amount in their account is enough for that manual pull each month. In terms of what our portfolio looks like in terms of defaults, et cetera, I would say we're still pretty new and early on into seeing what that's going to look like over time. So Steward was founded in 2017, but looked at a couple of different lending models before we really hit this participated loan model, which enables kind of a larger volume of loans. And so, pretty new in that and understanding what kind of long-term and default rates look like. I would say one of the biggest learnings over the past, let's say 6 to 9 months, that is pretty notable for farms, and kind of there's this tension between our lenders and our borrowers, is farmers as a customer and kind of ag producers, there's always going to be cash flow challenges at different times of the year. As you can imagine, winter cash flow is going to look very different than summer cash flow, yet loan repayments are still happening on a monthly basis. And the reason why we maybe have in some ways less flexibility, is because the lenders are actual humans like you and me that expect loan repayments to happen every month. It's not like a big institutional bank that it doesn't matter. It's lenders. And so we kind of are constantly looking at how do we keep lenders happy, but then also knowing, hey, our customer are these farmers that always are going to have cash flow issues. Any business is going to have kind of ups and downs. How do we make sure that we're doing a good job to meet both the needs of our lenders and our borrowers? And that's a constant work in progress.
And you mentioned, Alissa,
Awesome.
that you tried. Sorry.
Oh, no, go ahead. Sorry.
You mentioned, Alissa, that you tried other different models. What didn't work from the other models, and why are you choosing and betting on this one, or what are you trying this one, and what are the results so far like?
Yeah, I would say a lot of it has to do with some like financial regulatory stuff that's a bit over my head as having an agricultural background. But the short of it is SEC regulations in the US are very, very costly, basically, to work under securities versus lending. And so some of our kind of former models were securities and had to be with getting money from accredited investors, which are people that have to have over, I don't know what the amount is like over $1 million. It's over a certain amount of net worth, versus what was the appeal of the participated loan model is that the threshold of the amount of money that people have to have or what it needs to be. Like technically the financial term is sophisticated lenders. And what is a sophisticated lender? It's basically having the mental and financial capacity to make the decision of like, yes, I can put in this $200 and it will not financially ruin me if I do not get this $200 back. And so basically the reason for this model versus old models is really enabling more kind of that democratization of investing. And even though this isn't an investment, it's a loan, as well as getting out kind of from under SEC regulations that are more in the investment world.
Nice.
Cool. And I have maybe like one final question, or maybe if we have time for one more, folks can put that in the chat. But I'm curious, and some of these things that farmers might need to enable further entry points into regenerative practices that are blockages, kind of not on the farm side, but maybe on the input side, like biological defoliants or mobile processing units that farmers might not own as their infrastructure, but would enable regenerative farmers to be more successful and more carbon friendly. Do you think that Steward would ever like branch out to loans to like supporting farm businesses, or is it like really the farmer focused model right now, which is obviously important? There's a great need for capital among farmers.
Yeah, no, that's definitely the case. So we definitely started with just this concept of, okay, farmers are the ones that need it in this kind of regenerative, sustainable agriculture system. But then as we started to underwrite these loans and realizing, okay, yes, farmers need it, but then there isn't the infrastructure to support regional food systems. And so we have found ourselves more and more working on like meat processing projects is actually a pretty big focus right now in terms of like understanding what that need is and what that looks like. Many of these pasture raised beef and poultry operations can't get slots in a meat processor within 200 miles of them because capacity is limited, and many of these processors only want to basically give you a slot if you're going to bring in thousands of birds or hundreds of cattle, versus many of these have like much smaller volume. And so we are definitely looking at meat processing. We've talked to biological input companies, talking to like grain processing, like the total range of that infrastructure is definitely something we're working on learning more about, and what that looks like.
Awesome. That's really exciting to hear, for sure. So maybe we'll take Nathan's question, and then kind of wrap things up in a couple minutes here. But do you have trouble finding farmers at the top of your funnel, or are you more limited by capacity? I find it curious that the platform is limited by farm projects, given that we hear financing is the main barrier to adoption. Good question.
Yeah, that's a fantastic question.
Yeah.
We typically find that it's not a capacity problem on our end. It is more about many of these farms, are doing this type of farming for passion and because they love what they're doing and they love the impact it's making. But for many of these types of farms, the business and financial acumen is something that's like typically limiting from their business. And one of the things that our diligence process is designed to do is make sure, we don't want to ruin anybody's business. We don't want somebody to take on debt that isn't ready to take on debt. And so part of it is finding the balance of how do we support these farms that aren't yet ready to take on business debt, and kind of help them kind of get through the financial diligence process, and knowing when to say yes and no. So we certainly have a lot of farms that are interested, but then just like maybe not ready to take on debt. Their finances aren't looking good. I think running a small scale, human scale agriculture farm is not a profitable, it's really hard to make it work. I don't know the percentage, but I think it maybe even the majority of farms have to have off-farm jobs to actually, I know so many farms that joke, it's like, I'm supporting my farming habit via my off-farm job. you know, and kind of having to support their agricultural business through an off-farm job. And so we certainly want to find and help more of those farmers get to the point where their business can be profitable, it can cash flow. And I think a lot of that too is just getting Steward's name out there so that when the time is right, those farms can kind of come in and take a loan when it's needed.
Totally. Really great point. We heard that profit was a sort of antithetical concept to many small farmers when we spoke with one of them recently at the last course. They're just like, all of our revenue, we plow back into supporting the farm and like hiring labor and buying our inputs. And we just, it all goes to that. So yeah, that's a really, really good point and a thing to continue to think about with financing options and support for farms of various types. Yeah, thank you so much for all of this incredibly useful information. Let me just see if there's anything else. Eduardo, did we answer? I don't know if we answered the last question that you put in about the sudden increase in lenders, like why so suddenly were so many more lenders increased, but maybe that's a good place to end.
I have a different question.
Different question. Okay, yeah, let's end with your different question.
How can we take Alissa to the farm school and get her with us?
She's close by. She's in Oregon, so we could just ship her up here.
Yeah, at the moment I am actually in Oregon. I normally live in Michigan, or I live in Michigan. I'm just on a trip working with one of our food hub projects up here in Astoria, Oregon right now. But would love to kind of get more involved. And I was talking to Lainey before this of, since my background's more in kind of commodity scale agriculture, kind of bringing that narrative of how the larger system kind of functions and works, and kind of bringing some of that background in would be really cool.
Yeah.
I will also.
Yeah. Sorry, Lainey. Go ahead. Go ahead.
Oh no, I was just saying we'll keep in touch with Alissa. But Alissa, what were you gonna say?
I was just gonna say, I in the chat am sharing the website. It's not steward.com, it's gosteward.com. And happy to kind of follow up with anybody that has any questions. If anybody wants to become a lender and has questions, like I said, can always kind of direct any questions to Danielle Hansen, who is our head of lender relations, and can answer any of those like lender based questions as well. And if you know of any farms that are looking for financing, make sure they know we exist.
Awesome. Definitely. Well, thank you so much for this, Alissa. This was awesome. Really, really appreciate your time. And thank you to everyone for joining and asking such great questions as well. And yeah, have a great rest of your day, everyone. I'll share this recording with the group and with you, Alissa, once it's processed. So thank you all.
Perfect.
Thank you, Alissa. This was awesome.